Trend reversals are one of the most difficult things a trader finds in trading. When to identify a potential trend reversal. So in this video, I use something called Delta Divergence as one particular strategy that I have in my toolkit that I use to help me identify a potential trend reversal. So in this video, I want to explore a little bit in detail what a Delta Divergence looks like. All right, so what we have, the exact definition of Delta Divergence. Let's have a look at the exact definition of Delta Divergence, because Delta Divergence you can only get from footprint charts. And if you don't know how to use footprint charts, then this is really not going to make any sense to you, okay? But if you know what footprint charts are and how to use them, then this is something that will be applicable to you. But if you haven't used footprint charts before and you want to learn how to use footprint charts, they are a fantastic tool, guys. Link is in the description. I have made a comprehensive course on footprint. But anyways, let's get into it. Let's have the exact definition of Delta Divergence. If we look at it, the Delta Divergence in volume footprints refers to a discrepancy, a disagreement between price movement on volume delta. Positive delta divergence occurs when price successfully moves downward while the volume delta rises, possibly even turning positive. Conversely, negative delta divergence occurs when prices successfully rise while the volume delta falls or even becomes negative. These divergence patterns often suggest that despite the current price action, the underlying buying or selling pressure is diminishing, potentially signaling the weakening or reversal of the current trend. This is the key, guys. Potential weakening of the current trend. Okay, this is why I use tools like footprint charts to tell me, to show me that the move in one direction, it might be coming to an end. Without footprint charts, you cannot determine whether something is weakening or, you know, market sellers are getting exhausted. Okay, but this Delta Divergence, if you use footprint charts, is one of the many components I use to identify trend reversals, because we don't see Delta Divergence at every low and high or every key level. Okay, so I want you to bear that in mind. Delta Divergence doesn't happen everywhere and it doesn't happen on every single reversal, but if you see it, it's a very, very powerful indicator. And I'm going to show you a few examples for a potential long setup and a potential short setup using Delta Divergence. So let's have a look at that. All right, so what you can see here, guys, is a footprint chart. Okay, this is a screenshot taken from ATAS trading software. Okay, so this is the setup that I use, and I know that Delta Divergence definition must appear quite confusing to a lot of people watching this. However, I want to completely simplify what Delta Divergence means when looking at a footprint chart. Okay, so what can we see here? We can see that we are aggressively moving down in one direction. So this is a very aggressive move to the downside. Now, please note, guys, that Delta Divergences, you cannot use them anywhere randomly on a chart, right? You can't just say, okay, I see a Delta Divergence now, I'm going to go long. Or I've seen it now, I'm going to go short. No, this is not how we use Delta Divergence. Okay, so this Delta Divergence here that I'm showing you has to be at a key level, guys. All right, this has to be at a key level. This level that we have identified here, all right, this level has to be a key level. All right, has to be a key level on the chart. Otherwise, this is not applicable. All right, this is not something that I will use if it's not at a key level, right? So okay, so we have our key level here. We can see we are aggressively moving down to the downside, and from the footprint statistics you can see we have a lot of negative delta in these candles. All right, look at this. So we have 1100 negative delta in this candle. Okay, we also have 810 negative delta on this candle, you can see, and then the subsequent candle, the low the third candle, we have, look at the statistics, guys. All right, we have 399 negative deltas. So even from just looking at the statistics alone, you can see that this move is getting weaker. Okay, it's 9.69 on this candle, the amount of shorts in the candle, 6.51 amount of shorts on this candle, and 6.32. So you can see already that the move is getting weaker. Okay, from a potential downside move. Okay, the downside move is getting weak. All right, let's take away this. Now what else can we see? We can see that this candle here is a green candle. Okay, so this little bar here that you see, this is a positive green candle. This is a negative candle. Okay, red, same thing you see on TradingView. Okay, green and red. Red represents negative, green represents positive. All right, so this has actually closed positively. So we have a positive candle here. All right, guys, this is a positive candle. However, when we look at the statistics tell us that we have 399 negative more shorts in this candle than longs. However, the candle still closed green. So it's a bullish candle with more shorts in here. All right, so that's telling us a couple of things. That's telling us that we have buyers stepping in. Number one, we have buyers stepping in. Not only that, they're stepping in, but they're actually getting rewarded. All right, so the price is now moving to the opposite direction. It's starting to move higher. Okay, this price is moving higher now. You know, price is starting to change direction. Another thing it's telling us is the shorts are not getting rewarded. Okay, we have negative 399 on the delta, but the price just isn't moving any lower. All right, this is actually closed positive. This is what we mean when we say delta divergence. All right, there's a divergence between the amount of negative delta and the positivity in the candle. Okay, so the candle is actually bullish, but the delta is actually negative. This is the prime example of delta divergence. Okay, this is what we mean when we say delta divergence, guys. All right, the definition is confusing, but when you see a practical example like this, this is what we mean by delta divergence. And as you can see here, that means even though we've got a lot more shorts than longs, the candle has actually moved to the upside. All right, so this means that we have passive limit buyers. Whoops. Sorry about that. Okay, so that means we have actual limit buyers sat here absorbing all these shorts. Okay, all these negative shorts that we have, negative 399 more shorts in this candle, they're getting absorbed by bigger, larger passive buyers that are sitting there absorbing all these negative order, these market shorts. Okay, they're absorbing all of these orders. So this is a classic setup for me. All right, to go long on this. We have a trend. We're going down aggressively. You can see that from the volume. Okay, you can see that very aggressive, coming down into a key level. Okay, delta is fading, so we have 810, 399, 1200 on this one. So we can see the delta is fading, and also we can see that we have delta divergence on this candle. So that gives me confidence to take this market long. So this is what you see when I say in the group that we're seeing delta divergence and I'm going long. This is what we mean. All right, so this is one of my playbooks that I have in my toolkit to identify potential trend reversals. Now I want to show you another example of one from a possible short setup. Okay, so again we have this candle. specifically, all right, we can see that the delta is positive, but the candle is actually a negative candle with positive delta. This again gives me confirmation that this is a possible trend reversal, and we can take this market short. And you can see subsequently the market moves down quite heavily. All right, so you can also see that from the delta, you can see, you know, coming into it we had 278, but as soon as, you know, we hit this key level here, you can see a shift in market between buyers and sellers. And on this candle we have more buyers than sellers, but we have active sellers we have passive sellers absorbing all these market buys. All right, they're absorbing these into this key level. This is a sign for me to take this market short. All right, so this is how we use footprint charts, footprint statistics. One, you know, you're not going to see this at every key level or every potential reversal in the market. It doesn't work like that. I mean, when it happens, it's beautiful. All right, that's one of the things I look for. If I see it, that is a very, very high conviction trade, what some people like to call A plus. If it happens at a key level and I see delta divergence, that gives me great confidence to take the market in the opposite direction for a trend reversal. But those are your two examples on how I use delta divergence to identify trend reversals. I hope you guys can see the power of delta divergence and the power of footprint charts. Okay, they're not the holy grail. I mean, just because you use footprint charts does not guarantee you're going to make money. However, if you want to learn how to trade professionally, then most professional traders that I know, they use footprint charts. Okay, most institutional bigger players in the market, they use DOM, they use the footprint charts, they use volume profile. This is the kind of tools that a professional uses instead of just candlesticks. Okay, candlesticks are great to map out your levels. Don't get me wrong, they are fantastic, but solely relying on just trading view and candlesticks, for me, in my opinion, that's a very risky game to play. You want to be using advanced tools that we have at our disposal. I know they look complicated. However, you know, after studying them, after using them, after practical examples, watching videos of people who use footprint charts, you should get the hang of footprint charts pretty quickly. It's more of an art using footprint charts. I mean, it's not the most simple thing in the world, but if you want to be successful at trading, it's not a simple game, guys. All right, it takes a long time to be successful at trading, so you got to be very dedicated. And if you want to be professional, if you want to learn to trade professionally, then the route that I would recommend that you go down is the footprint. Okay, use the footprint charts, use the DOM level 2, all this great stuff that we have as traders at our disposal these days in the market. Okay, so we need to be taking advantage of these tools. All right, they're given tools and we have to be using them. All right, don't get me wrong, I use candlesticks as well to map out my levels, that's for sure, but I use footprint charts to execute trades. All right, without footprint I cannot execute trades, and I hope that you can see why I use footprint charts, because how would I ever able to identify a potential trend reversal without those statistics? Absolutely no chance. I hope you can see that from this example, because show me how I would be able to use just a candlestick to get that information. All right, it's impossible. So if you're using just candlesticks and you're looking for a potential trend reversal, you're more likely than not gambling. All right, using RSI and stuff like that. Those are lagging indicators. That's not live data. All right, that happens. The lagging indicators happen after price. Okay, this is in the moment. This is actual live data coming into the market. So I hope you can see that footprint charts are very, very powerful. And if you want to learn how to use them comprehensively, we have a course that we have designed comprehensive. It will show you A to Z how to use footprint charts in your trading if you want to become a professional full-time trader. Okay, anyways guys, I hope you took something from this video. If you like what you see, please hit that subscribe button. I appreciate every single each and one of you guys. Okay, so thank you for watching. Stay safe out there, traders. Peace.